It's nice to hear Caleb's laugh again. I haven't played that for a while, but all is well with the little man and he's growing well. In this video, I'm going to be looking at the debtors ledger, and I'm also going to look at what we call the control account in the general ledger. I'm going to compare the control account in the general ledger with the account of the school in Caleboo Education's books in the debtors ledger. So I'm looking at the debtors control account, or accounts receivable, you might know it as. We are doing the books as we normally do for Caleboo Education, and we sell on credit to the school. So the school is a debtor. We are going to look at all the transactions with the school that we have done with the school. We are going to once again look at the journals where those transactions were recorded. We'll look at some of the documents just to refresh, but we will look at transactions that relate to the school in the cash book receipts, the debtors journal, the debtors allowance journal. There's a transaction in the general journal and also a transaction in the petty cash journal. Then what we're going to do, the main focus of this video, don't worry, I'm going to do that account and you will see it properly, but it's the debtors control account. And in the debtors ledger, we are going to do the account of the school. In the debtors ledger of Caleboo Education, we will do the account of the school. The school is a debtor. And then what we're going to do is we're going to make sure that this control account in the general ledger, which is a summary of all the individual debtors, for example, an individual debtor of Caleboo Education is the school. So this control account, the balance of the control account, should equal the list of the debtors. But in our example, we only have one debtor. So the control account is in the general ledger and the account of the school is in the debtors ledger. And we're going to look at all the transactions that Caleboo has made with the school for the month of February. Let's have a look where this video fits in the monthly bookkeeping cycle. So we're going to be looking at the debtors ledger and the debtors control account. So the transactions would be credit sales. There would also be debtors returning items and a few other transactions, maybe some discount. All these transactions will be recorded on documents. The documents will be recorded in the journals. So the debtors journal, the debtors allowance journal. I mentioned there's a transaction relating to the debtor, the school, in the petty cash journal. We're going to receive money from the school. That will be recorded in the cash book receipts journal. Then we're going to post that information to the general ledger and the debtors ledger. This here is the focus of this video. The debtors control account in the general ledger and the school account in the debtors ledger. And at the same time, if those two balances, the list of debtors and the control account, equal, we would have done a debtors reconciliation. So this happens on a monthly basis. The debtors ledger is done on a daily basis. I will demonstrate that to you over the course of this video. So that's what we're doing today. And you guys have already done, if you're on the course, theory, you've done VAT, you've done the accounting rules, you've done calculations, so you're quite accomplished at this stage. And now we're coming to the end of this course, so well done for getting this far. Let's move on. Also, I did a bonus video just understanding the relationship between your business and your bank, and your debtors and your creditors. This video will increase your knowledge of your relationship with a debtor in your business. You will understand the basics of the debtor's ledger and the debtor's control account. What we're going to do, first of all, is the right hand side here. I will do the school account. There we go. The school has an account with Caleboo Education. We're going to look at the account of the school. We're going to take the transactions that relate to the school. I'll show you a few documents, although that's not the focus of this video. I'm going to take that information to the relevant journals, and we are going to focus, as I've said, on the debtor's ledger, the school account in the debtor's ledger. Once I've finished the school account in the debtor's ledger, we will move on to the control account in the general ledger, and we're going to post the information from the journals to the debtor's control account, and we will compare the balance of the control account and the balance of the debtor's ledger account. In this example, the debtor is the school, and if they equal, we would have reconciled the debtor's ledger with the debtor's control account in the general ledger. So hopefully they will have the same balance. This is just to show you exactly what I just said. Here we have the general ledger of Caleboo Education, a completed debtor's control account. We're going to complete this over the video, and you see here, this is quite interesting. Once we posted all the information to the debtor's control account in the general ledger, there was a balance of 18 cents. Now Caleboo Education only has one debtor, the school, right? The school has an account with us, and if we look at the final balance there, it is 0. And as you can see, these two balances should be equal, and they're not. So what we're going to do through the course of this video is find out why there's a difference of 18 cents between the control account and the account of the school in the debtor's ledger. And when we do find the difference, we will say we would have reconciled between the control account and the debtor's ledger. These are the transactions we have been using with Caleboo Education for the month of February. Lots of transactions. And remember, we are basically looking at the relationship between Caleboo Education and the school. In the month of February, Caleboo Education started trading. It wasn't only cash anymore, but there were credit transactions involved as well. And we allowed the school to open an account with us, and we sold to them on credit. Now I've been through all the transactions, and I took out all the transactions that relate to the school. And what we're going to do is I'm going to go through each transaction, and like I said, I'm first going to do the account of the school in the debtors ledger of Caleboo Education. So Caleboo Education sells to the school on credit. Stock will be delivered to the school, and the school will pay us back at a later stage, depending on what was agreed with the school. The terms and conditions, normally the school must pay within 30 days. So we're going to look at all these transactions, and we're going to record all these transactions. Remember, all these transactions are first documented, then they're posted to the relevant journals, and then the information is taken to the ledgers. This information is taken to the general ledger, remember, on a monthly basis, and the information is taken to the school account on a daily basis. This is an example here of a tax invoice, and the tax invoice has recorded this transaction: sold goods to the school on credit, issued invoice number 23. It was for 3,200 excluding VAT, and we've done journals. Where would that be recorded? In the debtors journal. So this transaction gets recorded on a source document, a tax credit invoice, tax invoice. Caleboo Education sold to the school on credit, including VAT, 3680. So we've done documents. It's not the purpose of this video, but I like to be thorough, and just a little bit of revision. I'm showing you some documents that are used to record information in the journals, the debtors ledger. This is an example of a credit note where the school wasn't happy with some goods, so they got a discount. This was recorded in the debtors allowance journal, so we'll have a look at that. But we've done a debtors allowance journal in previous videos, but this is an example of a credit note where the school was credited. Then the school paid us, we issued them a receipt. Now the document used to record the receipt of cash from a debtor. And then there's a petty cash voucher. What happened here in this case was we at Caleboo Education paid 245 Rand for the delivery of stock to the school. And we took petty cash to pay for that, and we charged the school's account. So it was recorded on a petty cash voucher. And then just a journal voucher that records money that was written off. You will see the school is going to go into liquidation. It's a private school, and it's going to go into liquidation, and we're going to have a bad debt. So these are the transactions that we're going to look at. Sold goods to the school. The school was unhappy with some stock. These are the journals where the information will be recorded. Cash book receipts, we received some money. Another credit was given to the school. Another credit sales. That petty cash transaction, we received money from the school. Okay, this is what this video is all about. On the 9th of February, Caleboo Education sold goods to the school on credit. Issued invoice 23 for $3,200 excluding VAT. This information we know, a credit sale is recorded in the debtor's journal. So let's record this information in the debtor's journal. The document is invoice 23. The day is the 9th. We are only dealing with one debtor in this example, the school. The debtor has a folio reference D1. Where did that D1 come from? There it is, the debtor's ledger. And in the debtor's ledger, there is the account of the school. This is the debtor's ledger of Caleboo Education. Now the amount, I'll run through quickly. The debtor is charged VAT. That is called VAT output. We collect the VAT output plus the 3,200 from the debtor. And then remember, the output VAT is owed to SARS. So we need to include in the sales amount the VAT. So we say 3,200, and if I want to add the VAT, times by 1.15. I'm not going to explain the VAT, they're in the VAT videos. That gives us 3,680. Now all the credit sales are recorded in the debtor's journal. The information relating to the school needs to on a daily basis be recorded in the school's account. So we have a look there. The opening balance for the school was 0. This is the first month that we're actually trading in credit. So the balance is 0. Now on the 9th, from this journal, the information is taken to the account of the school. The code, now what this column here, the code is for, if you don't remember, is for, it's an internal code. So Caleboo Education decided that 01 will be the code for credit sales. So you can have your own code for credit sales within your business. The one I'm using and the one that most textbooks use is 01. 01 is the code for credit sales. The document, there it says, is invoice number 23. Where did we get this information from? It was recorded in the debtor's journal and taken to the debtor's ledger on a daily basis. And in the debit column of this debtor's ledger, look at the layout. Remember, you must put the document and the document number under the document number column. And where did the information come from? Debtor's journal number 1. Now this is where this is very important. I like to follow my rules. A debtor, if you remember, is a current asset. It's an asset. And a debtor owes us more, plus an increase in assets, the school owes us more, it must go in the debit column. And the amount includes VAT, 3680. And the balance then will be 3680. The debit column will increase the balance of the account because it's an increase in assets. If a debtor had to pay us, it would be a decrease in what the school owes us, and the rule says a decrease in assets, it must be credited. But this one transaction resulted in us, or the school, owing us more. We categorize a debtor. A debtor is an asset. Because we made a credit sale, the debtor owes us more. It is a plus, and a plus will go in the debit column and make the balance bigger, 3680. So I'm just painting the picture here because I'm going to record all the transactions in the account of the school, and right from the beginning I want you to do it accurately according to the accounting rules. So I'm going to go over that. The school is an asset to Caleboo education. The rule says an increase in assets when we make a credit sale because the school owes us more. An increase in assets, the account must be debited with the VAT included, 3680. Now the school owes us more, so the balance will get bigger. So under debit it's a plus, credit it's a minus for a debtor. When we do a creditor, that is actually the opposite, because a creditor is a liability. But more about that in the next video. A debtor is an asset. Increase in assets, debit. A decrease in assets, credit. For example, when a debtor was given a discount or a debtor paid us, it's a decrease in assets. So this transaction now has been taken to the account of the school in the debtor's ledger, and this happens on a daily basis. Why? Because we will keep a running balance. So if the school phoned us on the 15th and they wanted to know how much do we owe you, we have a running balance. We can check what the school owes us on a daily occurrence. If they phone, we know what they owe us, because these transactions are taken from the journal on a daily basis. When it goes to the control account in the general ledger, it is on a monthly basis. But we're first going to do the school's account in the debtor's ledger. So that was the first transaction on the 9th. Let's spend some time on this next transaction. What has happened, the school wasn't happy with the stock sold to them in the previous transaction on the 9th, the one we've just completed, and they requested a 20% credit. So what happens in a case like this? The school would have sent us a debit note. A debit note is a claim for goods which do not comply with the order. So the school informed us that they weren't happy with the stock that has just been sold to them, and they sent us a debit note. Now what happens is Caleboo Education investigates their claim, and in this case here they accept their claim by issuing a credit note. So a credit note will go to the school, credit note number 54. The original document goes to the school, and Caleboo Education uses the duplicate credit note to issue this credit or to record the transaction. So let's have a look. The original sale was 3680. If we go back and have a look, the amount of the sale on the 9th, including VAT, was 3680. We've given them a credit of 20% of that amount, so multiplied by 20%. 3680 multiplied by 20% is equal to 736. Now what happened originally is when we made the credit sale, we charged the school output VAT. Now when there's a credit, we need to reverse that output VAT by debiting input VAT. And the amount is calculated by the amount of the credit, 736, which includes VAT, multiplied by 15 over 15 is 96. Remember, this is revision, what I'm saying now, but I'm just going over it again. And then the sales returns amount is the sales return amount excluding the VAT, and it's 640. Now revision, in this column, if the stock was returned to us, and we assume it was returned to us, there's not enough information in the transaction. If the stock was returned to us, we record under cost of sales. The stock was returned to us by taking the sales amount, dividing by 1,4, because the markup on the cost price was 40%, and that gives us 457.14 cents. So this is revision. I'm just going through this journal entry again. It was done when we did the debtors allowance journal, but just a little bit of revision, how these amounts were calculated. Now that gets recorded in this video. The amount that we are concerned with is the debtors control amount, which includes VAT, because remember we're going to do the school account in the debtors ledger. So the amount that the school gets credited is 20% of 3680. This part here was a little bit of revision. So in the school account, that information on the 10th gets taken to the school account. Our code at Caleboo Education for giving credit is 02. The document is the credit note, which is actually the duplicate, and it was number 54. There, that information came from the document or the journal. Where did we get this information from? A credit, which is given to a debtor, is recorded in the debtor's allowance journal, and the amount of the credit is 736. Now, this is interesting, and I'm going to explain to you what credit means. Remember, the school, I'll keep harping on this, but you need to understand why an account is debited and credited. The school is an asset, a current asset to Caleboo Education. Now, because we gave them a credit, the school owes us less, and the school is an asset to Caleboo Education, and a decrease in the value of an asset, the account must get credited. so it goes in the credit column. The amount including VAT, 736. Now, if it's in the credit column, it was a decrease in the value of the asset, so the credit column is making this balance smaller. And that makes sense because the debtor, the school, owed us 3680. Now they've just got a credit of 736, and now they owe 2944. So there's an example of an allowance, a credit given to the school because they weren't happy with the stock that they had received on the 9th. And we, Caleboo Education, issued a credit note to the school and we gave them a credit. So it went under the credit column and the balance of what the debtor owed us decreased by 736. And now what the school owes us, Caleboo Education, is 2944. You see, this is a running balance. 3680 minus the 736 is now 2944. And that there is just how the 736 was calculated. We took the amount of the sale on the 9th and took 20% of that because that was the amount of the credit. That was the credit that was given, 736. So that's an example there of how from the journal the information was posted to the school's account, the debtor's ledger, on the day the transaction happened. So we ended up with an up-to-date balance of what the school owed us. That brings us to the next transaction. On the 13th, sold more stock to the school on credit for 25,000 less a trade discount of 5%. Now credit sales get recorded in the debtor's journal. The next invoice number was invoice 24. The day is the 13th. Who are we selling to on credit? The school. What is the school's folio? It is D1. In the debtor's ledger, the school has a folio D1. Now the amount is the amount after the discount has been taken off. Trade discount is not recorded. So it's 25,000 either minus 5% or times by 95%, and you get 23,750. Then you can calculate output VAT, sales excluding VAT, and the cost of sales, but that's not for the purpose of this video. So what happens on the 13th? That information gets taken to the account of the school. The code for credit is 01. What was the document and number? Invoice number 24. Where did the information come from? DJ1, the debtor's journal, and it was debited. Why? The debtor owed us more. It was an increase in the value of the asset. It must get debited according to the rules. And now what the school owes us goes from 2,944 plus 23,750 to 26,694. So as a result of another credit sale, the school owes us more, 26,694. On the 14th, the school paid us, and we gave them a 3% prompt settlement discount. Now this is interesting. We are receiving money, so it goes into the cash book receipts. We issued a receipt. You can ignore these transactions. I'm only interested in the transaction on the 14th because we're doing all the transactions that relate to the school and debtors control. So on the 14th, the school paid us, and the amount that was owing was the existing balance, there it is, of 26,694 minus 3%, and that gives us 25,893. And a debtor settled this amount, and the amount was 25,893, and it's actually 18 cents. Now remember that we were 18 cents out at the beginning of this video, and I picked up that in this calculation, there you can see, the cents column was made 00, but I fixed that error, and now it's 25,893 and 18 cents. That amount now gets recorded in the debtors ledger, the school account. The code for receiving money is 03. The document is a receipt. Don't forget to put in the number. And the folio, where did the information come from? The cash book receipts. And the account is credited with the amount less the settlement discount. And that gives us now a balance outstanding of 882 cents. Now that there, because in this transaction they say the school settled their account with us, the balance should end up 0. But the discount, which is 882, the balancing figure at this stage still needs to be accounted for. That's why there's another journal that is required to record the settlement discount, and that is the general journal. So the 882 outstanding according to the books in the account of the school still needs to be accounted for. All we've accounted for in this transaction that I'm just doing right now is the amount of money that was received from the school. But the transaction says the school settled the account with Caleboo Education, so the balance should be 0. So what we still need to do in the general journal is account for the discount, because the balance needs to be 0. So the next transaction we are going to do, or part of this transaction, is recording the settlement discount in the general journal. See that it still has a balance there. The school's account still has a balance of 882, but the transaction says settled, so the school settled their account. That should be 0. So let's see how this settlement discount is recorded in the general journal. So if we have a look at the general journal, what they do is, first of all, they credit debtors control, because remember, the total discount amount goes in the credit column, because you know your rules by now. There's a decrease in what the debtor owes us because of the discount. So that full amount must be recorded in the credit column, 882. This year, you don't have to worry too much about now. But remember, the output VAT that was originally charged needs to be reversed, and the net effect of this discount, it actually makes the sales figure smaller because discount was given. Some textbooks will use an account discount allowed, but I'm going to debit the sales account directly by this settlement discount. But what we're concerned with in this video is the amount that gets entered into the school's account and later on the debtor's control account, and the amount is 882. So let's have a look. Settlement discount allowed, the code is 04. The information was recorded on a journal voucher because settlement discount is recorded in the general journal. The information came from general journal number 2. The account is credited, decrease in asset by the amount of the discount. And guess what? It is now correct. The debtor, the school, settled their debt with us. So that means now the balance is 0. We received 25893, and then we also need to record the fact that the school got discount, and that results in a 0 balance for the school in the debtor's ledger of Caleboo Education. So there the discount was accounted for. On the 15th, sold stock to the school on credit, 7,500. Remember, all these transactions include VAT, otherwise, unless otherwise is stated. So that 7,500 includes VAT. A credit sale gets recorded in the debtor's journal. It was invoice number 25 on the 15th. Who's the debtor? The school. What was the full amount? 7,500. Those calculations not for the purpose of this video. Now what we need to do on the day the transaction took place is take that information to the school's account. 01 is for credit sales. The document is an invoice. Where did the information come from? The debtor's journal. Why was the school's accounts debited? Because there was an increase in the value of the account. The school owes Caleboo Education another 7,500, and now the balance is 7,500. Remember, in the last transaction the account was settled, but now they've bought on credit again, and the amount is 7,500. On the 16th, the school returned stock to the value of 1,500. We agreed at Caleboo Education, and we issued them a credit note to accept their claim for goods that didn't comply with the order. If there's a return from a debtor, the transaction goes in the debtor's allowance journal. We issue them a credit note, CN 55. It was on the 16th. How much was the school credited? 1,500. Not going to go through those calculations. Now that information is taken to the school's account. Returns, the code is 02. The document is a credit note. Where did the information come from? The debtor's allowance journal. The amount was 1,500. That's a decrease in assets. There it is. The account must get credited. And now the debtor owes us less. 7,500 minus 1,500 is equal to 6,000. On the 18th, trading inventory was sold to the school on credit. Nice and easy. If we make a credit sale, it gets recorded in the debtor's journal. There's the document, the day. What is the name of the debtor? It's the school. What's the debtor's folio reference? D1, debtor number 1, our first institution with an account with us. There's the amount, 6540. Not interested in these calculations right now. And look on the 18th, credit sale 01, invoice 26. Where did the information come from? We know the debtor's journal. Why was it debited? Increase in assets. And now the balance has gone from 6,000 plus 6540. The school owes us on the 18th 12,540. Also on the 18th, the goods had to be delivered via a courier. So the delivery cost was charged to the school. So we used petty cash to pay for the goods to be delivered to the school. So we record this in the petty cash journal. A petty cash voucher was used. The day was the 18th. It's just courier costs. The amount was 245. And look there. The school needs to get debited, increase in assets. And there's the code for petty cash or courier costs 05. The document was petty cash voucher 14. Where did the information come from? The petty cash journal. It was debited. Why? Increase in assets. The school owes us more. We went and paid for the delivery costs of the goods on behalf of the school, and we charged it to their account. So we're going to get those costs back from the school. And now the balance has gone up by 245. And the school owes us 12,785. On the 21st, let's have a look. Looks like a bit of a mouthful here. We were informed that the school was going into liquidation. Not good news. We're only going to receive 60 cents in the rand of what was owed to us. The balance is going to be written off. So on the 21st, we receive 60 cents in the rand. The document is a receipt. We issue a receipt. Under analysis of receipts is the amount that was received. And it's quite easy to calculate. We take the 12,785 that was outstanding. There it is. The 12,785. We're receiving 60 cents in the rand, so 60 out of 100. So we're only receiving really 60% of the outstanding debt of the school. 12,785. There it is. We receive the money, we issue a receipt. Where did we get the information from? The cash book receipts journal. That is the amount. It was taken to the school's account. We receive 7671. It goes in the credit column because the decrease in the value of the asset. And the amount that we are not going to receive is 5114, because it says here we are only going to receive 60 cents in the rand. The balance is going to be written off. So there we go. We received the 60 cents in the rand, and the balance is going to be written off. So the final balance 5114 is going to be written off, and that goes through the general journal. So in the general journal, we have a look here. 5114, the school's account is credited with that final balance on the school's account. We're not going to receive that money. 40 cents in the rand is going to be written off. Don't worry about the input VAT and the credit losses. That means bad debt, because we reverse the output VAT and we go debit input VAT. But we're concerned about the school's account. That 5114 is posted to the school's account. The information was recorded in the general journal. We drew up a voucher, journal voucher number 14. The account was credited, decrease in assets, and the balance is 0. So those were the transactions which were related to the school. Now, if the school wanted to open an account again, we most probably wouldn't do that. If you did do business with the school again, we would make sure it would be cash transactions. We wouldn't give them credit. And if we did do a transaction with the school again, this account, when a debtor has been written off, will not be used again. If we receive money from the school in the future, we will not record it through the debtor's ledger, but rather just the cash book receipts. And we'll have an account, bad debts recovered, credit losses recovered. But that's just a little bit of extra information. We have now done the debtor's ledger, the right hand side here. We've taken all the information to the school account in the debtor's ledger of Caleboo Education. Now what we need to do is we need to do the debtor's control account by taking all the information from the journals at the end of the month and posting that information to the debtor's control account in the general ledger of Caleboo Education. Remember, the control account is a summary of all the individual debtors. Caleboo Education at this stage has only one debtor, and we see now this debtor went into liquidation. So the balance of the control account should be equal to the balance of the debtor's ledger. And if we took a list of all the debtors in the debtor's ledger, there would only be one debtor, the school, and the school, as we saw, now has a balance of 0. So we need to do the control account in the general ledger and see if it equals the account of the school in the debtor's ledger. So let's do the control account in the general ledger. The first transaction that needs to be recorded in the control account is, if you remember, on the 18th, what happened was Caleboo Education paid for the transport costs of items that were delivered to the school. And out of petty cash, the transport costs were paid. And under sundry, you will see, cost 245. Now there wasn't a column for debtors. in the petty cash journal, so this transaction was recorded under sundry. And if you remember, if a transaction is recorded under sundry, the transaction needs to be posted to the general ledger on the day the transaction took place. So in debtors control, under details we have petty cash, it was the 18th. Where did this information come from? The petty cash journal, and the amount was 245. And why was this account debited? Because the debtors owe us more, and according to the rules, an increase in assets, the account must get debited. These courier costs were charged to the school's account, and remember the control account is a summary of all the individual debtors. We've only got one debtor in this business of ours, Caleboo Education, and that is the school. So the control account was debited because the school owes us more, an increase in assets. So that's the first transaction that was posted to the control account in the general ledger. Now we need to go to the journals, the debtors journal, and we see at the end of February we have made credit sales to the amount of 41,470, which means debtors owe us more. An increase in assets gets debited, and the total of the control column at the end of the month, the 29th of February 2024, the information was taken from the debtors journal, and the amount is 41,470. So at the moment, debtors owe us 245 plus 41,470. Let's see what other transactions took place. So we've posted all the credit sales from the debtors journal to the debtors control account. Then we have a transaction that took place in the general journal, and it was settlement discount that was given to the school, and we calculated the amount to be 800 Rand and 82 cents. Now this discount here has resulted in a decrease in assets, so the control account in the general ledger must get credited, because a decrease in assets, the rule says the account must get credited, and the amount was 800 Rand and 82 cents. And this transaction took place on the 14th. Remember, there wasn't a column in the general journal for debtors control, so the transaction gets taken to the control account on the day the transaction took place. And there we see debtors control, the school account was credited, decrease in assets, with 800 Rand and 82 cents. That was the settlement discount on the 14th, after the school settled what they owed to us, Caleboo Education. Then also in the general journal, what happened was the school went into liquidation, and debtors control needed to be credited because there's a decrease in assets of 5114. There's the entry 5114. that amount was written off and it was taken to the control account in the general ledger. The transaction took place on the 21st. The contra accounts are credit losses and input VAT. Where did the information come from? The general journal. So what happened here, let's just summarize this debtors control account. 245 was charged to the debtors control account for courier costs. There were credit sales for the month of 41,470. Those transactions resulted in the school owing Caleboo education more. Then what happened was there was settlement discount when we were paid, and also there was an amount of 5114 written off. So let's move on. Then during the month of February, what happened was the debtors paid us 33,564 and 18 cents. When debtors pay us, there's a decrease in assets. So what needs to happen to the control account? The control account, there we go, is credited with the amount of money that was received from the debtor. So now we have all the transactions relating to the debtors for the month of February, and what we need to do now is balance this control account. Whoa, but there's one more type of transaction. The school returned items to Caleboo education that still needs to be posted. So there it is, from the debtors allowance journal 2236. Now hopefully we have all the transactions that relate to the school or our debtors in the control account. If items are returned to us, the debtor owes more, and the debtor is an asset, and a decrease in assets gets credited. And there we go. This is the complete debtors control account. Courier costs charged to a debtor to the school. Sales for the month of February to the school. Settlement discount was given. There was a bad debt we received for the month of February from the school, 33,564 and 18 cents. There were returns. Now we've learned how to balance general ledger accounts. We add up the credit side and we add up the debit side, and we see that the two sides are equal. So we add to the smaller side. There is no smaller side here because the sides are equal. You can add up both sides and the balance brought down is 0. What you could have done if you did want to, you could have written your balance carried down 0, added up the two sides, both sides equal 41715, and on the first day of the next month we have a balance brought down of 0. Now that's quite interesting, and it's actually very good because the balance of the control account is 0, and I'm sure you are starting to see the light. Look there, the balance in the debtors ledger of the school account is 0. And if we make a list of all our debtors, there was only one debtor, the school, And what is the balance of the control account? 0. So the two are equal. That's what we were trying to do. We've reconciled here between the control account and the individual school account in the debtors ledger. We made a list of all the debtors. There's only one debtor, the school, and the list equals the balance of the control account. That is a debtors reconciliation. I hope you enjoyed learning about the debtors ledger, and we did a little bit of revision on the control account. You are now familiar with the debtors ledger, and we nearly finished this course. One more video on the creditors ledger, and then you will be ready for your exam. Thanks everyone for watching. Keep up the great work.